Hello guys, how are you guys doing? Welcome to another class. This will be a continuation of our previous class. Today we are going to be talking about price delivery in SMC. Okay, price delivery in SMC. So what is price delivery? Now, price delivery is the process of a situation where price leave a certain trend to another trend. Okay, is that situation where the market will grab a lot of liquidity and then spike up or down to a particular level. For example, let's say the market is in this place. Now the market grab a lot of liquidity here and then boom, that is price delivery. Now when price is at this phase, when they ask you where was price coming from initially, you know that this is where price is coming from initially. Okay, this is supposed to be a okay, let me just leave it. This was initially a supply that then became a demand. So you know that this is where price is coming from. Price is coming from this supply here. Okay, now when price is at this place now and the price have starts moving up, okay, after you see a change of character, liquidity sweep and all of that, all these lows were taken out as liquidity and the market is now going up. Now, when you are asked where is the market coming from, you know that the market is coming from this demand down here, and this place is going to be broken. Price breaks it, come back. Where is price coming from now? You know that this is where price is coming from. So that is just what price delivery is. Price delivery is not just the process of price delivering. Okay, okay, in our definition, it said is the process by which institutions accumulate liquidity within a range, then consume that liquidity to push price into a new range, therefore creating a new trend. I don't know if you guys understand something here. It's just the process where this big institution, they'll grab a lot of liquidity, then they'll push price. Now that price that they just push is what is called price delivery. Before any price delivery, there will be a liquidity sweep. The price delivery will have to happen in a supply level or a demand level. Okay, and the third thing is order flow. The market always comes back to mitigate the previous order flow, sweep liquidity, then create a new trend. That is just what price delivery is. So price delivery have to do with order flow, liquidity, supply and demand. And another thing is that price delivery help us to know which market phase are we. So now, okay, we have the pro trend, we have the counter trend. What is a pro trend? A pro trend is the particular trend that you are, will I say the particular trend that is aligned with your higher time frame. Let's say, for example, now we know that price is buying, right? The market is buying like this. Now, if we start buying from here, like this, we are buying to this place, it's a pro trend. But this retracement is what we call a counter trend. Okay, so price delivery help you identify your pro trend and your counter trend easily. So when price comes to this demand and you get a change of character here and then a break here, you know that okay, now you have started buying. If you are asked what market phase is the market now, is the market trending, ranging, you just know that the market phase now is that the market is bullish. Price is coming from this supply to demand, going to the next supply, and when price gets to the next supply, price will now drop to another demand to continue. When the demand fail, then we now know that we are going down. So that is simply what price delivery is. So let's dive into the chart so that we can look for more examples and say, okay, this weekly, let me remove all this, let me go to daily. Okay, this is a daily time frame. So maybe I should cut from where. Let's use this place here. Let's use this place. Now, the first thing to do is that when you go to your daily time frame, you look at your structure. Let me add this watermark so that this Euro USD on a daily time frame. So I will start by marking this. This is a break of structure. This is the last major break of structure. So that means this is now our daily strong swing. Let me increase this a bit. And this also. I normally like mine to be smaller. So we have a break here, okay? We have another internal break here. We have another internal break here. So this is our daily time frame internal swing. But mind you, an internal swing on a daily time frame can or usually used to be our major swing on 4 hours, so no need for that. And next, I think let's dive into 4 hours. So next we now go to our 4 hours. You can see 4 hour structures. I usually used to make sure that I mark my structures. They really help me to understand the market. Let's increase this also. 20. Okay, this one was not a break. I think I'll take the one above. Just be patient and keep following. So, okay, this was the daily internal. You can see that it is now a 4 hour swing. So we can now name this our 4 hour strong swing. So now we are going to be focusing on the 4 hour swing. Okay. Okay, up here, what's really happened in this place? Let's see what's really happened. These are of internal structure on a 4 hour time frame. Just okay. We have a break here. And we have another one here. So now, where was price coming from before this break? Okay, now before we go further, I want us to understand something. After you mark your structure, the next thing to consider is where is price rejecting from, or where is price coming from. Okay, now look at this breaker block here. This was where price came from. You see, price came and reacted to this breaker block. I went up. Now down here, we have this nice supply level here or order block, but there's no any available liquidity here for the market to come and take. There is no available liquidity here for the market to come and take. So most of the time, what the market usually do is that if you see, especially a 4 hour time frame, let's say this is a break, no any inducement here that the market will come and take and continue going. Most of the time, the market will use the breaker block and then continue. But if you see price come to this place, there is high possibility that it's going to sweep here because there's no leg inducement there. Okay, so now in this case, look at the breaker block here. This candle, it's very big, but since it's on a higher time frame, we'll use it like that. Then you extend it to the right hand side. Now we know that what we are going to be looking for in this place is going to be buys. We'll buy here, targeting this high. This sell that happened here, this was price coming from another place. Price was reacting from another supply somewhere else. If you check at the left hand side, you see that price was reacting to another supply. So what I will now do now is that I will now go down to my 1 hour time frame. I'll go down to my 1 hour time frame to look at what price have done. Now we have a change of character here on a 1 hour time frame. This is a break, and this was the last high here that was broken too as well. So where are we expecting to look for buys from? We're expecting to look for buys at this demand here. This demand here. Let me change this to 1 hour supply and demand. So this 1 hour order block is where we are going to be looking for buys from. So we need to see a change of character here on a 15 minutes time frame for us to now confirm that okay, price have started making delivery. Okay, so you can just choose to enter from here, but your stop loss will be big. And look at what happened here. This was a liquidity sweep. So it is more advisable that after you get your 1 hour change of character, if your stop loss is going to be big, you can now look for a change of character in a 15 minutes time frame. So in our 15 minutes, we had this here. And then what we are looking for next is a break. Okay, we have a break now. Now, where will our entry be? You can choose to enter from the last candle here. You can choose to enter from the breaker block, or you go up to 1 hour or 30 minutes. Look for a valid place. Like for me, my entry will be at this place. Let me remove this one. This is where my entry will be. So I'll enter from here. Put my stop loss here. And then my target will be this place. Because I know that definitely the market will come and sweep this high. It's going to take that high as liquidity. So the market didn't come back to our entry. So next is that now I already know that okay, price is coming from this place. So we missed this first trade. What I will now do is that for continuation entry, I'll be using the breaker block after any break on a 30 minutes or 15 minutes. I'll be using the breaker block on a 1 hour to continue the trend. You can see. Now I'll look for another break. Okay, price came back to our end. If price do something like this, break, I can choose to enter from here again to continue. So that is just what price delivery is. Okay, that is just what price delivery is. Price delivery is simply knowing where the market is coming from and where the market is likely to go to. You see that if we put our stop loss below here, the market wouldn't have taken us out. Here now, I can choose to still enter from here. Delete this one. I can choose to still enter from where? This breaker block here. I'll put my stop loss below here to continue buying, targeting this high. So price delivery is knowing where price is coming from and where price is going to. Okay, let's go back to our 4 hour time frame. We know that okay, price is coming from this place. Price is coming from up here, probably reacting to another supply in our left hand side. So we know that price is reacting from to something here. So price is coming from this place. Now, if you are an SMC trader and you now know that okay, this is where price is coming from, you saw a change of character on a 1 hour time frame. You know that the closest place that price will come to is either this breaker block or where the extreme. You just mark the breaker block, then you mark the extreme too as well, this extreme. So since you now know that okay, this is what where price is coming from, you know that the market is on a counter trend. Since generally the market is on an uptrend, so this is a counter trend. Everything you are trading here is a counter trend. You see, break, retracements, you enter, you sell. You wait for retracement again, you enter here, you sell. You wait for retracement again, you enter, you sell. Like that. Till when you now get to your supply or your demand, you now start looking for a change of character on a 1 hour time frame. When you get a change of character on a 1 hour time frame, internally, you can now go to 15 minutes in order for your stop loss not to be big. You look for a change of character on a 15-minute time frame, and then you look for an entry there. You go. That is as simple as that. Now, if I'm buying from here, I now know that, okay, I'll be taking the market gradually. When it hits my TP, I'll wait for another retracement, I enter. Now, I know that the market can either reverse from here or break this high. So what we are going to be expecting here next is this. We're expecting the market to either break this place. We're expecting the market to either break this place, or the market to come to this demand, to this supply and start reversing. So when the market comes to this place and start reversing, you see a confirmation that, okay, the market is now reversing. You start going down again. Now, one major confirmation, let me clear all this. One major confirmation that is a proof that price delivery have started is this. You will need to see a change of character on a 4 hour time frame and then a liquidity for the market to sweep. If we're looking for buys from this down, there's no liquidity here. This extreme, there's no liquidity here. We can easily say that this is the liquidity here, but this is far from the demand. It's very far. So, knowing that this place is a liquidity, yes, we know. We now mark the breaker block. What did price now do next? Price came down and actually swept the liquidity. You see, price actually swept the liquidity. After the liquidity was swept, then we now look for a change of character to enter to the upside. We still have another liquidity here. This is another liquidity for the market to take out. You see, this one is closer to the breaker block. Now, the next thing I talked about is order flow. Is order flow. For this buy to continue, or for this price delivery to be valid, there must be an order flow mitigation. If you draw your Fibonacci from this low up to this high, you see that the breaker block is within the 50%, 0.5%, and price came down like this to mitigate this order flow. Look at it, price came down to mitigate this order flow. So you see that the order flow is mitigated. We have a demand there, and also we have liquidity for the market to come and take out. That is a confirmation that price will reverse from this place. And apart from that, there was a break of structure here. There was a break of structure here. This break of structure is now showing us that the price is on an uptrend. So even if this market is planning to come and take out all this place, once the market sweep this liquidity, it will make a quick reversal first before then coming back. So the market can easily do something like this. Then it will come back to maybe this extreme, or take out this extreme to this down before it will continue buying. So that is just it. You should know where to enter, where to wait for. Okay, let's say for example now, you cannot be looking for a 4 hour supply here. Let's say you are selling from this supply here. Let's say now, you'll now be looking for this extreme, this extreme, this extreme. Since you already know that price is coming from up here, and you know that for this price delivery to end, price needs to get to another supply or demand. That will give you much confluence to start selling. I hope we understand. So that is just it about price delivery. First thing to do is that you should mark your structure from a daily time frame. You mark your structure like this. After marking your structure, now you now ask yourself, that's after you mark the daily time frame, you mark the 4 hour. Now let's say this is 4 hour now. You ask yourself, where is the market coming from and where is the market going to? Okay, let's say for example, this market haven't gotten to this supply. You wait, or if you see any confirmation for a buy here, you can take the buy and get in this place. When you now get to that supply, what you now look for, you look for a change of character on a 1 hour time frame. When you get a change of character, you now know that, okay, this market will be coming back to mitigate this order flow. You start looking for sell here. Now you know that okay, I have all my confirmation. There is a liquidity here for the market to come and sweep, and the market have taken out the liquidity. Also, the market gave me a change of character on a 1 hour time frame. It can be an internal market trend or external market trend on that particular time frame. Then you go to your 15 minutes, you look for confirmation and start selling. Now, if I'm selling and in this place there is liquidity here, I know that the market will likely come to this place. The market will likely come to this extreme, or the market will come to this breaker block. So any sell I'm taking from up here, I'm targeting this breaker block. I hope you understand. If the market gets to this breaker block, I'll close my trade and then I'll wait. If there's no confirmation here, I'll still look for more sells because I know that the market will break this place, or I'll wait for the market to break this place. I continue selling and I target the next demand. When the market gets to this demand, I look for my confirmation. Okay, this order flow have been mitigated. We have a liquidity sweep. I start looking for buys again. That is just how to flow with the market. This is what is called price delivery. It's price delivering from a certain supply to a demand, and also delivering from a certain demand to another supply, like that. If this market buy from here and start reacting from this point, and when you come to your 4 hour, you see that okay, there is a supply there, you wait. If you see a confirmation, then you know that the market is still falling. There is possibility that maybe a daily time frame is retracing, then this 4 hour will fail. The market will break it. You keep looking for sales until when price delivers to another demand, you start looking for buy. When price delivers to another supply, you start looking for sell. Look, like I said in our previous class, price moves from supply to demand and demand to supply. I hope we get. So this will be the end of our today's class. Just go to your charts, cut a certain part, and backtest this, backtest this, backtest this. When you see a 4 hour failing, then you know that there's something happening in the daily time frame, or there's no available liquidity there for the market. And mind you, the markets can always do its thing. So have a very beautiful weekend, guys.